Most people think retiring early is only for millionaires, that you need a six-figure salary, the perfect stock picks, or some secret strategy. But the truth? With just 500 euros per month, you can set yourself up for financial independence quite quickly. And I'm going to show you exactly how. This is in theory. I've run the numbers, built my own portfolios, and tracked my real life investments for years. I've tested different approaches and I've seen firsthand what works and what doesn't. More importantly, I know what holds most people back. It's not the lack of money, and it's not bad timing. It's the belief they can't do it. The biggest mistake people make is waiting. We actually talked about 3 top mistakes in the last video. If you're interested, press on the link here. Now, a lot of people think they need more money before they start, that 500 euros isn't enough to make a difference, or that they'll invest when they earn more. That kind of thinking keeps people stuck for decades. The reality is, wealth isn't built with one big move. It's built with thousands of small ones. And the sooner you start, the less effort it actually takes. I'll break down exactly how to do it, where to invest, and how this simple approach can let you retire years, if not decades, earlier than you ever thought possible. And stick around until the end because I'll show you a real portfolio where I invest significantly smaller sum, 100 euros per month, and the results might surprise you. Now, the first step is understanding what financial freedom actually means. Most people think of a random number, like a million, 2 million, 5 million, I don't know, 20 million. But that's not how I look at it. The way I calculate financial freedom is quite simple. Let's take an example. Let's say I want 1,000 euros per month, which is my main expenses. Now, if I time it by 12, I get 12,000 euros, so my yearly expenses. You can do exactly the same calculations with any number per month. And then next, I want time it by 100 and divide it by 5% return. So if I want 1,000 euros per month, I need a portfolio of 240,000. In this instance, you can calculate how much you need for 2,000 portfolio, 3,000 portfolio, 4,000 portfolio. Quite easy. Now, if it covers the essentials, I'm financially independent. So I can choose to work, but I can choose limited options of what I can do with my free time. Now, if it covers 3 times my expenses, I'm financially free. When I started investing seriously, my first goal was very simple: reach 100,000 euros in investments as soon as possible. I focused on investing as much as I could, and I hit that number before I was 30. After that, I shifted my focus. I still invest 20 to 30% of my income, but I also balance enjoying life now. That's the key. Invest aggressively early, and you give yourself options later. A lot of people overcomplicate investing, but the best approach is actually the simplest: passive investing. That means putting your money into broad, low cost index funds that do the work for you. No stress, no guesswork, just consistent growth over time. Of course, you do have fluctuations over the time, but over the long term, it's a steady growth. Just look at it from the bird's view. Now, my core strategy, at least 70% in passive index. Now, S&P 500 is my go-to because it's returned around 10% annually over the long run. It's diversified across 500 of the biggest US companies, and it requires zero effort. It takes me about 30 seconds to invest per month. Just invest and let time do the work. Now, for those who want some active management, the best way to approach this is through satellites. No more than 10% each in areas like individual stocks, crypto, or even alternative investments like art or wine. But the core, that should always be a stable long term foundation. Now, let's talk about what happens when you invest 500 per month consistently. If you start at 25 and invest 500 euros every month into S&P 500 ETF, assuming the 10% average return based on 100 years of historical data. Now, again, history does not guarantee the future, but it rhymes with the future. And 100 years do count for something. So, in this example, by the time you're 50 years, you'll have around 660,000. By age 65, staggering 3.16 million. Even if you only started at 35, you still end up with over 1.13 million by the time you're 65. The key here isn't picking the perfect investment or trying to time the market. It's simply getting started and staying consistent. But here's why the most people never do it. They wait for the right time. They think the market is too high or that a crash is coming. But the truth is, trying to time the market is the losing strategy. The best investors understand that time in the market beats timing the market every time. And to prove this, I've been running a small investing experiment. I invest just 100 euros per month into the S&P 500. I've been doing this for 2.5 years, and so far it has returned quite a significant growth. Let me show you around. Let's open Freedom 24 and go to S&P 500 portfolio. where I literally invest 100 euros a month each month without doing anything else. I use Freedom 24. If you live in Europe, the link is in the description. You can even watch my portfolios. They're public. Now, if I go on my profile, you can see that 600 people is already subscribing to this portfolio. Now, 98.98% is VUAA. The return, staggering 37%. It literally takes me about 15 seconds, maybe like up to 30 seconds to literally invest each month. You can even go into the position opening trades and you can see that literally by 1 unit for the all last year. Previously, when it cost a little bit less, I bought a little bit more. That's in 2023. A reminder that you can open an account yourself completely for free and see where I invest. Maybe you'll get some ideas. And I'll remind you, this is with no stock picking, no trying to predict anything, just simple, consistent investing. Now, the plan is clear. Invest 500 per month into a passive index fund, stick to it, reach financial freedom sooner than you ever thought possible. And I think that's it. But here's the reality. Most people won't do it. They'll find an excuse. They'll tell themselves they'll start next year. They'll think they don't have enough money. They'll wait until they get a raise or they pay for some specific big expense in the future. And that's why most people never escape the paycheck to paycheck cycle, because the people who do, they don't wait. They start now. If this video made you rethink what's possible, here's what you should do next. First, take action today. Open an account, investing account which is available in your country. If you live in Europe, my choices are below. Start investing, even if it's like 50 euros. Second, follow my portfolio. I share everything I invest in. And finally, drop a comment below. If you do have any questions, ask. I respond to all of them. Your future self will look back to today and either thank you or regret that you waited. You get to decide which one it is.